Hey guys, Wes here with Wood Financial Group. Thanks for tuning into this video. And I first of all want to wish you guys a very happy Easter this weekend. I'm recording this as of Good Friday. The stock market is closed today. I want to take this time just to update you on kind of what's going on out there and perhaps even your portfolio and fill you in on what we think is soon to come. But yeah, so this week in the market, we finally had a calm week, which is nice to see that. You know, a lot of times when the markets are going as crazy as they are, it's more reacting instead of being proactive. But now we can actually start being a little bit more proactive. So the Dow Jones on Monday was up over 1,000 points. On Tuesday it was relatively flat. Wednesday up about 700 points, and then Thursday rounded out about 260 points up, which is good to see a nice leveling off there. But even though we've seen a good week in the market and things are calming down a little bit, I want to be clear, I don't think this thing's over yet. I believe there is going to be another shoe to drop, probably another drop in the market. You know, the coronavirus is, just a month ago was at 1,000 infections. Now we're up to 400,000 reported, and probably going to get up to over 1 million or so. And what that's doing to the economy is unreal, unprecedented times. Just this week we got the unemployment reports. Over 16 million people in the last 3 weeks filed for unemployment. The largest jump we've ever seen in economic history for unemployment. And we may see those numbers begin to drop as far as reports. So there may be 3 or 4 million unemployed coming up, or 1 million or so. But we need to remember that even if those numbers are dropping, it's just adding to that big 16 million plus number. So it's going to continue to rise. We may see unemployment as high as 30%. Is what some institutions are forecasting. And with that being said, we're definitely going into a recession. The GDP, gross domestic product, some places like Goldman Sachs are forecasting a negative 24% GDP. Some have said it's going to be in the 30s. We're just going to have to wait to see what the real effect on the economy is going to be. Which tells me that the market is still perhaps a little bit high. And what we've seen recently is some investors buying back in, and a lot of times in a falling market, they call this a buyback, and it's backfilling the stocks. So the market, for instance, dropped 40%. We've seen an increase up again. We're probably going to see another drop, an increase, perhaps another drop or so. So just want to be prepared for that. I know a lot of the talking heads right now are saying, oh, take advantage of the markets now, and buy in, but I want to be prepared that we're probably going to see another drop. So this may even be a little bit of an opportunity to sell at the peak as of now. So maybe a few weeks back when you were down 40%, you're like, gosh, I can't get out now. Well, hopefully a lot of those losses have gathered back. This may be a time to take a little bit off the table. And if you do that, now you've got some dry powder to perhaps buy back in when it's very low again. But I just want to give you my perspective, and that's kind of where I think we are. I don't think it's over yet. I don't think it's over yet. But I know, as a country, as an economy, as investors, we'll get out of this whole thing eventually. I'm sure of that. But right now, I think in the short term, just be prepared for some more drops in the market. But that being said, on your more conservative portfolios, I know a lot of folks that work with me and us, they're looking for conservative investments. And just remember, and this is going to sound a little bit redundant, but I think it's important, remember that a lot of your money may be in insured accounts, which means cannot drop and will not drop with the market falling. And then you may have some money, instead of being insured, perhaps another half or so is in non-insured or in fixed income portfolios, perhaps with TD Ameritrade. Now, those positions are down in value. Not as much as the stock market, but they are down. But I want to remind you again that a lot of those positions in that portfolio, like bonds and preferreds, maybe as much as 3/4 of the portfolio, are in fixed income positions that pay interest and dividends. And your interest and dividends have not changed at all. They've stayed the same and will stay the same. And in those bonds and preferreds, most of those have a par value or face value that will, when they mature, will be worth that par value. So there's an opportunity for recovery. Really, the big risk with those positions, there is a risk, is going to be if there's a default or bankruptcy. So that's where we're looking at them, and our third-party money managers are looking at those individual positions and making sure that they've got plenty of cash sitting on the sideline to weather the storm that we're in right now for a long, long time. So that's where the management comes into play. And of course, if there's any of those companies in the portfolio that we're really concerned about, third-party money managers and us will make those adjustments need be in order to protect what we can. But as of now, the positions in there are looking okay and just fine. And even if you're looking at your statement that you've got maybe at the end of March, a lot of those positions have bounced back a whole bunch since then as well. So just remember that those positions are not the stock market. They're much more conservatively invested, and you even may have half of your money in the insured, no risk stuff as well. So just wanted to give you that information here on a Friday before this weekend to hopefully give you a good weekend, give you some good peace of mind, and so you can really enjoy the Easter. Although it's going to be a whole lot different than probably your typical Easter. I know we are, as a family, going to do a Zoom Easter with our extended family just to say hello instead of being able to get together like we have in the past. Definitely one to remember, but I want to wish you guys a happy holidays, a happy Easter, and of course, on that note, if you have any questions, concerns, comments, if you're concerned at all, please do not hesitate to give us a call. Maybe you're sitting here thinking that, okay, I get what Wes is saying. I get that my portfolio is conservatively invested, and I'm okay with where we are now. But if you're not, maybe you're having some concerns, then give us a call. Maybe we need to recalibrate what you have to get it more in line with what you really want. So please give us a call if you have any questions. Happy Easter. Talk to you soon.